Right, mate. Wyloo Mincor. What's going on here, mate? There's a bit we know a lot about M&A these days after the St. Barbara and Genesis side of things, and there is some comparisons with what's going on with Wyloo and Mincor, the situation that St. Barbara are in. So we'll get into that.
There is, mate. I read the announcement today and I had a bit of PTSD.
Oh, God. We're gravitating back towards this so-called field of, I don't know if you call it expertise, but maybe we will be. So, Trav, what is happening with Wyloo Mincor, mate? Why isn't it finalised? What's going on?
There's a bit to unpack here, right? Like there's, baked into this announcement that Mincor have put out today, there's a production update, there's potential for Mincor to default on their debt facility, there's some more insight as to the product that's being produced by Mincor and how it being on spec or off spec and their offtake with BHP. And all of that is happening in the context of this takeover offer from Wyloo. So I think
Trav, can I compliment you first up for I feel that you're holding your breath so well at the moment after the amount of research you've been doing. That first sentence was sensational, mate. I reckon you're
you got to set the scene up front and then you can lose. You have permission to lose
start
your breath.
losing yourself. Right, get into it.
Yeah, mate. It's I think it's actually also going to be important just to remind the money miners a bit of a timeline here, because I think a lot of people have probably lost a bit of interest in Mincor. Like, who's really still following the story of this stock? You sort of, you've been following the headlines. You think,
think it's a foregone conclusion.
Yeah, Wyloo's there. That you saw the announcement that they're over 50%. You sort of just think, okay, well, that one's going to just fall off the ASX, and I think that's all a reasonable thing to do, and I was pretty disinterested too, but I'm just still sort of reading the announcements as they come through, and I think this one is probably worth unpacking, but I will unpack it after we just remind the money miners of the timeline here. And I mean, the timeline, it's not a bloody long one, mate. I remember we talked about this, when we started the show back in March. So
yeah, it was one of the first stories.
Yeah, exactly. So like the timeline for the money miners, Mincor, they received an on-market hostile takeover offer from Wyloo on the 21st of March, right? 9 days after that, Mincor disclosed to the market that they were having some operational challenges. There was, some product that they were producing wasn't meeting the specification for BHP. And then 4 days after that, Wyloo, they reaffirmed their $1.40 per share offer price, but they declare that offer price best and final. So they can't increase the value of the bid there. And then on the 24th of April, so look, only about a month after they made the bid, what you saw was Wyloo, they'd gone over the 50% acceptances. So there's, a change of control event there. They're greater than 50%. And then the acceptances sort of slowed down a bit. You saw Wyloo extend the offer period a couple of times publicly. On the 8th of May, Wyloo, they put out this supplementary statement to the market where they actually sort of just indicated that if they can't reach the 90% acceptance threshold, then, there's a chance that Mincor may ultimately be delisted from the ASX. And then IGO ultimately sold their $52 million stake into the offer on the 12th of May. And on Friday last week, Wyloo announced the final extension to the offer period, and they basically announced that their offer period is going to close on the 5th of July 2023, so just over a month from now, Matty.
And I think just in between that as well, Trevor, if everyone remembers, before they put in that best and final, when they did the initial hostile takeover, I think Mincor went up to like $1.60 odd, because the market was thinking, is a BHP going to go in this? Was there a bit of a takeover battle happening? But then this, I think it was high arsenic off-spec nickel sort of come in, which sort of went against, not favourable towards Mincor, and then it's like, best and final $1.40.
Exactly.
So there was a bit of a spike, but then it retreated back.
Exactly. Yeah, the operational issues as they were disclosed, basically, saw that $1.40 look like a pretty good price relative to what the risks might be there during a ramp up period. So it sort of paved the pathway for a deal to get done in a relatively quick time frame. But you're right, the market was totally pricing in the potential for an interloper to come in there and create a bit more of an auction for the asset. But we haven't seen that to date. And what we saw today though, Matty, was Wyloo, they're now at 73%. They need to get to 90. They're at 73%. And we see Mincor put out this operational update. So let's unpack the interesting things in this announcement today. The main one to me is that their current cash flow situation and the potential impact that that could have on their syndicated debt facility with BNP Paribas.
Right. So is that, in layman's terms, Trav, another, I guess, debt covenant issue similar to what St. Barbara were going through with their bank lenders, which was affecting, I guess, the timeline or creating a timeline for the Genesis thing? Is this similar to what we're talking about here?
Mate, it's exactly that. You take a look at the cash flow situation that they disclose in this announcement. In the last 2 months since their March quarterly came out, what Mincor are saying is that they've had cash outflows of $43 million and only receipts from sales of $26 million from BHP for their product to date. So, you can see there's a bit of a cash flow issue there. It's not entirely uncommon during a ramp up, but why does it really matter in the context of the deal at play here? Well, it's because Mincor, they have a $27.5 million revolving credit facility with BNP Paribas. That's that bank we were talking about. And it looks like they're going to be in breach of one of the debt covenants in relation to this facility. So yeah, very similar to the St. Barbara situation that we've been talking about plenty. The covenant at play here is a historic debt service cover ratio when it's set to be measured as at 30th of June. Now, Mincor, they've requested a waiver for this, but if the waiver is not approved, they say it would be an event of default.
So it's not is it the same as, is it a review or is it an actual, they will be in default or?
Yeah, if it's measured at 30th of June and they're in breach, then what they're saying is it would be an event of default. However, speaking to your point about a review date, what's actually happened is when Wyloo got over the 50% acceptance threshold, that in itself triggers a review date. And so in relation to that review date, BNP Paribas, they have until the 19th of June to conduct their review as well. So the crux of the announcement is, or at least this cash flow component, is Mincor really kind of flagging to the market that they could have some pressure put on to them from their lenders for this revolving credit facility if they're potentially in breach due to some of the cash flow issues at play at the moment during a ramp-up phase.
Now, does that open up a similar situation that the deal could then possibly be recut if they do breach those debt covenants?
I think not in this case. This is an unconditional takeover offer, so it's not like the net debt threshold. It's completely unconditional, right? But I think what it does do though is it probably if you're one of the 20% of shareholders that haven't sold your shares into the Wyloo offer yet, it's putting some degree of kind of pressure on you as a shareholder. You might be worried about what the outcome of Mincor could be if you don't sell into the shares, if you don't sell into the offer, and what happens to the company if that doesn't happen. And yeah, because as you said, the big key difference to this with the issues with St. Barbara and that, this is just Wyloo already have 70% of the stock, so they're not. It's not an asset sale. Yeah. So let's unpack this, right, Maddie? So there's a cash flow problem and there's a potential that BNP Paribas ask for their money back. What could actually happen in this situation? And keep in mind, it's $27.5 million in the context of Mincor's kind of total equity. It's not much, really. So
probably Twiggy'd pay that for his birthday party, I'd say. Nothing in.
I would have thought that a waiver could probably be provided in a relatively straightforward manner here, given their sort of line of sight to a Wyloo takeover completing. Potentially BNP Paribas might be worried that the takeover won't complete, and so they need some more assurance. But I would have thought the waiver would be relatively straightforward. If not, though, let's think about what options do Mincor actually have here? And because Wyloo's offer is already best and final, right? What are there any limitations for Wyloo to actually provide additional funding during this takeover phase? Given the fact that their deal's already best and final. Are there any restrictions there? So we had to think about what the certain possibilities could be here. And Matty, I'm keen to talk about what the three options I think are on the table here for Mincor in terms of sort of resolving this potential cash flow issue mid-takeover.
And those three are, Trav.
Well, mate, the first one, let's think about like if Wyloo provided just a working capital loan to Mincor right now, right? Like what are some of the limitations if they did that? Well, I had to ask Mr. Spector for some advice here, mate. Are there any sort of limitations on their ability to do that? And what Mr. Spector has told us is that it would require shareholder approval under ASX listing rule 10.1. And keep in mind, that would be a vote in which, Wyloo's 70-odd% can't actually account for that vote. Plus there'd be a fair and reasonable determination by an independent expert required as well. So like you can just imagine that's a bit unpalatable at this stage of an M&A process. It takes too long, it's too complicated, and there's no certainty you'd even get an okay. So, while they're listed on the ASX, you can sort of think that option seems pretty out of the realm of possibilities of something you'd want to go down. Now, they could, however, avoid the requirement for a shareholder vote if instead of a working capital facility, they actually did a rights issue. So let's think that one through, right?
But that does that only apply to the 30%, or can Wyloo participate in that rights
Wyloo
issue
can
as well?
participate. Yeah, a rights issue is if you have shares.
Yep, so they can
you
participate.
have an entitlement to new shares. But like think of the dynamics of a rights issue. There's currently a takeover offer at $1.40. So a rights issue, what would you have to price that at? I mean, in my head, it only makes sense to price the rights issue at $1.40 as well. And if you're one of the minority shareholders, you're probably not going to participate because you've already got line of sight to getting $1.40. And then if you're Wyloo, of course you participate, and Wyloo probably then could underwrite any shortfall. And then so it would just be one way for Wyloo to kind of plug a potential cash flow issue there. The downside is though, doing a rights issue takes time. I mean, literally it takes like 6 weeks. It's a pain in the butt because you got to post out all of these letters to every single shareholder, and it takes there's a level of disclosure you have to go to. They're a pretty
and the
frustrating
chance it's going to have low uptake.
Yep.
In it.
Yeah, but the uptake thing doesn't matter too much because Wyloo themselves can just underwrite it and they'll cover any shortfall. But even then, like if there is a shortfall, then placing that takes, there's just a process that's drawn out. And I imagine it's just given the fact that the takeover offer only goes until the 5th of July, doing this sort of rights issue here would just be a pretty damn unorthodox approach, I would have thought.
Yeah. So what in its current state, and I know there's a third option, what are Mincor shareholders getting at the end of this whole process? So Mincor remains listed, but Wyloo owns it. How's it working for everyone?
If it remains listed?
Yeah.
Like until the end of the takeover offer, you mean?
Yeah.
So
and after that.
So at the moment, right, if it gets to the 5th of July and Mincor aren't they don't have 90% acceptances to the Wyloo offer. So if they're below that, then what Wyloo have basically flagged to the market in their latest supplementary statement is that they will probably, there's a good possibility that they'll look to delist Mincor. So if you're a shareholder then, it's no longer listed on the exchange, so you can't easily sell your shareholding. So liquidity kind of vanishes. It's a pretty, it's a far less appealing sort of dynamic for a shareholder to own something that's not listed where you can't easily sell. The alternative though is you can sell into the offer and get your $1.40 cash in exchange for that. Now, Wyloo will be wanting to get above the 90% threshold so that it can become a forcible 100% transaction once they're over 90%, and they'll end up owning 100%. But yeah, the internal equation for a shareholder is why would they not be selling into the offer right now? The usual equation for a shareholder is, well, I'm waiting out to see if a better deal is on the horizon.
But what's the probability of a better deal converting when Wyloo already own 70%? It'd be very low, wouldn't it?
Mm-hmm. Yeah. Well, yes. Yeah. Yeah, and I'll get to that in a moment. I think let's talk about what the third option could be to solve a bit of a cash flow issue should it come about by the pressure that BNP sort of potentially put forth. Well, the third option would be that Wyloo delists Mincor, and if Mincor was delisted, then all of a sudden those ASX listing rules, listing rule 10.1, no longer apply. So they could then provide a working capital loan, for example. And in that situation, you don't have to adhere to the ASX listings rules because it's not on the ASX.
And what's the process to delist? Do they get suspended from trading and then a process to delist like that?
I think there's just a bit of a notice you have to provide to shareholders and give them the opportunity to sell their shares in advance or whatever. But I think, it's not a hugely complicated thing to delist, and it's not uncommon when you have one shareholder who owns 75% of the company for the company to choose to delist because the value add from being listed is less prevalent in that situation. So like my takeaway though, Maddie, I think the threat of action by BNP, it kind of enhances Wyloo's request for the remaining shareholders to sell into the takeover. I also probably think that Wyloo should disclose what their intentions are, regarding providing a funding solution so that the remaining shareholders, those ones who are hanging out, can just make a fully informed decision.
Yeah. So are they now, if that was going to happen, if they delist, I guess at the moment, are they relying on the remaining 30% of people to be selling their shares on market? So Wyloo have got a heap of orders in, or are they doing it off market at the moment? Like, are they contacting all these people?
It's an on-market takeover bid, and these are they're not very common way to do it, but because it's an on-market takeover offer, if you are a shareholder of Mincor, you can actually sell your shares today at $1.40 into the bid. So you get certainty of that $1.40.
Yeah, but until the people make the decision to sell them themselves, this could hypothetically stay in the 70% until they get to that 90.
Yeah, it could. And look, what Wyloo did is they declared it would be their final extension of this offer to the 5th of July. So come sort of 5th of July, Wyloo is really banking on having greater than 90% acceptances, but there's a chance that they might not be there yet. I think there's a couple of other notable things in this announcement to me as well, Maddie. One was just in relation to how they word the stockpiled ore. You see Mincor talk about the fact that they have 26,000 tonnes of ore stockpiled, but it looks like some of that was delivered to BHP and that was determined to be off spec. So I'm curious if they've taken the ore there and then it said it was delivered to them and then they've taken it back to their stockpile. I'm curious how that's all planned out in reality. And the other interesting part to me was just the wording around the offtake agreement with BHP. So in the agreement, there is this minimum annual quantity for amount of product to be provided in a contract year. Now, Mincor, what they say is that if some of the ore mined cannot be placed to BHP, then they'll fall very close to that minimum threshold.
So do you think there's something like, since this Wyloo takeover bid, now this is me hypothesising, which is, look, this is the fun stuff, but as soon as this Wyloo put this hostile takeover in, then BHP have said, oh, now your ore's off spec. Is there a strategy point from BHP to make things difficult for Mincor or not?
I'm not sure. I mean, like the timing between the offer from Wyloo, it was like pretty damn tight to that revelation of the operational troubles, and I imagine those operational hurdles were sort of happening beforehand as well because it was in relation to everything that had happened that quarter. So what's the strategy from BHP here? I think the reality is BHP. Like I'd underplay the potential that BHP cancel an offtake agreement here. Like BHP, I think the market kind of knows that they definitely want the ore from Mincor, even though at the early stages here there might be a bit of high arsenic. Like in the long run, Mincor's ore really improves the FEMGO ratio, which we had a
Yeah,
good discussion about on Friday.
Good discussion out on Friday on the Poseidon one. If anyone wants to learn about FEMGO ratio, pending to see if I got it all right, but I'm pretty sure I did.
Yeah.
Can you put your finger on why they're losing cash at the moment?
Yeah.
What have been the main operational, or what is causing it?
Yeah, I mean, like the cash flow issue is like basically, BHP are not accepting a bunch of their ore because it's off spec, so they're having to stockpile it. I'd
So
say
that was the big drive. That's the main driver of it.
that's the read through I have. Yeah, absolutely.
Yeah.
I mean, like some of their cash outflow was in relation to closing out hedges as well. So, so like that stuff's all a factor, and it's not uncommon to have a bit of a working capital hurdle during ramp up. There's often you can often see the light at the end of the tunnel though. And Mincor and Wyloo, probably can see the light at the end of the tunnel there. The interesting question to me is like, can Wyloo provide a funding solution here? And I think like that kind of relates to, is the risk of being delisted real? Wyloo, I think for them, it makes sense for Wyloo to convey to the market that risk of being delisted is quite a real risk to the Mincor shareholders. And in some ways, if you're one of those remaining shareholders, then, the equation for you, it becomes a bit of a different equation. And I really do think the big thing underpinning it all, right, is like who is actually waiting out here? Like, who are these shareholders, the 20 odd % of shareholders who haven't accepted the Wyloo offer? What are they waiting out for, right? Like, the share price has basically stayed flat at $1.40, which is the offer price anyway. So the market's definitely not pricing in the potential for anyone else to come in with a better offer. So I think that kind of, that whole dynamic of who might be waiting out here is one that's really interesting to me, especially like when you look at some of the broker reports that were out and about before the offer ever came. On Barrenjoey's numbers, the bid price of $1.40 would factor in, an extra 10 years of reserve life that they're getting out, that Wyloo would have to be getting out from Mincor anyway. So there's a bit of they're paying for upside already on Barrenjoey's numbers. Then you sort of look at it, and the nickel price has come off about $1 per pound US since the bid was lodged. So all of these factors, you're sort of thinking like, what rationale does a shareholder have to just be holding off here and not accepting the Wyloo offer? That's one that I'm a bit curious about, and I'm not quite sure what the rationale might be.
And holding off at the moment sounds like it's going to be a detriment, because it brings that whole debt covenant side of things into play, which sounds like it could open up a can of worms and bite Mincor on the arse a bit.
Yeah, but
what does it do to Wyloo? Like, if that debt covenant comes in, how would you say that affects Wyloo mostly?
Well, I think the debt covenant thing is a convenient circumstance for Wyloo, because it puts extra pressure on the remaining shareholders to accept their offer. In reality, it's not a huge quantum, right? Like $27 million. You can figure out a way around that. I think it would definitely be a lot easier for Wyloo if they could solve that issue, post owning 100% of Mincor, and absent, them getting over 90% to be able to do that, then I imagine they would just look to delist and solve it that way by providing.
Because by buying all the Mincor shares, Wyloo are taking on that debt.
Yeah,
that is their debt. Absolutely. Anyway, and it will be.
Yeah.
So whether they sort it out now or then, it has to be sorted out. Right, let's spitball Wyloo's strategy here overall, Trav. Mincor is, and we did discuss like BHP versus Wyloo. Like, BHP notoriously look for these, big assets, like, I guess, big capital, big long mine lives, world-class ore bodies, whereas it appears Wyloo are going into the smaller end of town, looking to, I guess, are they looking to consolidate this region? Is Mincor, I guess, the first play of combining a lot of the nickel sulfide Class 1 nickel deposits in that Kambalda region? Do you see... I personally don't think this will be the last little nickel play in this region.
It might not be. Yeah, there's plenty of nickel opportunities in the region, right? But those nickel opportunities, they really all come back to the strategic relevance of the BHP Nickel West smelter there. So like, you know, the deposits depend on the smelter and the smelter depends on the deposits. How it all plays out, you know, like, you know, I think BHP publicly didn't sort of deem that Nickel West operation a core asset. The way that they think about their future-facing commodities is a bit different now, and now it's sort of a bit more important from that perspective. But
because BHP will have the West Musgrave to feed into that Kambalda concentrator. So I think that what that Kambalda concentrator produces, that I think it's a 60-odd% matte, which then comes to Perth to then get processed. But remember, I don't know, what's the update? I know, weren't Wyloo and IGO talking about potentially building another nickel sulfate plant in that Kalgoorlie region, or did that get squashed? Remember they were talking about that at one stage? So whether that's, I'm not sure if that's still on the cards or not, because that'll, I guess, decouple them from BHP.
Well, Wyloo and IGO came out with a bit of they won some land allocation in Kwinana recently for a bit of a battery.
Yeah, that's right. So
facility.
I think, so
how does that play into their whole sort of plans together? And keep in mind, in order for Wyloo to get to where they are right now on the register of Mincor, IGO actually had to sell into their offer, which they did. So, you know, you can see the two of them are sort of they've got plans in this battery space that they've got plans together, and some of that togetherness actually was born out of the Western Areas deal, where there was a bit of a collateral benefit to Wyloo when they wedged themselves in on that deal.
Yeah, so because that Kambalda concentrators just provides that intermediate processing point for BHP to, you know, as we talked about, reduce the volume and send a lower amount of concentrate to Perth because it's at 60%. So whether with that, what's happening in Perth with the land they purchased with IGO to build that battery facility, I guess you would assume all the concentrate from these operations will just be going straight there to produce that nickel grade, I guess, that whether mixed hydroxide, precipitate and all that stuff. So plenty more to play out. What do you see as a timeline on this, Trav?
Mate, it's all going to come down to that 5th of July. You know, is there going to be greater than 90% by 5th of July or not? And my question to you, mate, is like, is there any party that would have an incentive to wedge themselves in
like
on
King,
the Mincor shareholder?
King did with Dacian, a similar play like that.
Yeah. But you can even think a bit more abstract because Wyloo's plans are big and broad. You know, is there anyone that would sort of have any benefit from just wedging themselves on the Mincor register and causing a bit of trouble?
I guess what will be the benefit if they did wedge themselves in? Like, because it's obviously makes life a lot more difficult for Mincor, even though they're a majority shareholder. It just still makes things difficult when you haven't got that.
Does it give you leverage to cast another deal with them in some other way? You know, all these sorts of things.
Yeah. So, like, what you could spitball that another junior in that area, not a junior, but a mid-cap nickel potential could wedge themselves in there to try and then get Wyloo to take them, or would they?
Yeah. I mean, that's one potential. Yeah. There's a whole bunch of. I'd be really curious to know like who's holding off on the offer, and frankly, some people just the share register is probably just a bunch of shareholders with a very low amount that just haven't, checked their mail or whatnot. But
probably,
if there is
some people wouldn't even know they had them or bloody have access to them, or they're tied up in a super somewhere.
If there's someone there sitting at 4.9 or a couple of entities there at 4.9%, so it's not coming up as a substantial shareholder, I'd be really curious to sort of know what those entities are. But we'll keep watching this one, mate. I think it'll all sort of pan out by the 5th of July, and there'll probably be a resolution. And talking about Mincor will be less and less relevant to the money miners. But until then, mate, we'll keep following it.
Too easy. Thanks, Trav. Lovely work. I think it seems like hostile takeovers take a bit longer because it can get to this stage where you're trying to find all these minority shareholders and trying to get it over the line, and it can really. And this is without anyone wedging themselves in there. That would have really made it a bloody
This one
cluster.
actually looked like it was going to be a lot damn faster than any other takeover I'd ever seen, because, like a scheme just takes ages because you need these court hearings and there's a bloody big scheme document. This was like, it could have been as fast as lodging a bid on 21st of March and it have been completed by sort of early May. So that's that is a rapid turnaround, right? Like, of course they've extended the period because gathering it all up, it sort of takes time. And normally there's a bit of change in the price along the way, but this one was just, that price has stayed the same. So, but it looked like it was going to be pretty damn quick.
But there's been nothing but, I guess, negative between the off-spec and now the debt covenant side of things. So it's like lends to the fact of, well, why people are hanging on if there's negative stuff that could potentially risk the whole thing.
And that's the argument that you sort of see talked about in the Mincor announcement today.